Hello everyone, welcome back to our latest episode of Market Bites, the first one of June. Sounds absolutely mental saying June already, but here we are, back as a dream-free Brett and Neja with me today. First of all, Brett, how are you doing across the pond?
I was doing great until you reminded me that the longest day of the year now is 2 weeks away. So I was feeling a little more optimistic until that. But outside of that, I'm doing well. How are you guys?
Yeah, all good. It is depressing. In literally under 3 weeks, the days are going to get shorter. But hopefully, we will have good weather for the next 3-4 months in Europe. Neja, how are you doing? How's your weather?
It's actually great. It feels like the first heat wave is right around the corner, so it feels like summer finally. So I'm doing great, thank you. But I missed you last
Fantastic.
week, and I'm happy to be back on the show. How are you, Sam?
Well, yeah, very good. It's great to have you back. I'm okay. I'm okay. I got a last minute ticket out to Budapest for the Champions League final, which cost me an arm and a leg, but I was willing to pay it to get out there and had an amazing time until the last kick of the game where we lost on penalties. But it was good fun, albeit getting home was a nightmare. Had to like sleep in an airport, didn't fancy doing that. And then I paid for a hotel for literally like 6 hours, but booked the wrong day. So I slept in the hotel lobby and luckily didn't get kicked out. And then I had like 2 flights to get home. It was just absolute chaos, but made it back. And do you know what? It's actually a little bit cooler in the UK than it was a week ago. And I have to say, I'm so happy about that because like, 30, mid 30 or like early 30 degrees in London, it's just too hot. It's just too hot for us. So yeah, all is okay. We'll have a little discussion today about a few bits, but I wanted to get Brett and Neja, your thoughts on just how things are at the moment because we've got certainly the US, the Nasdaq and S&P pretty much at all-time highs every single day, albeit at the time of recording today off their better levels. A lot of individual stocks are pushing higher. I do a webinar, and I know a lot of people that will listen to this will join it on Monday with our diamond clients. And I asked them the question about whether anyone is thinking about rebalancing soon. And the reason behind that question was just because so many stocks have done well. And obviously a lot of those weightings within people's portfolios will be higher than maybe they actually wanted to, or they might think about taking profit. The answers of all the people that got back to me, it's 51% yes, 49% no. So there wasn't really a clear winner, but it does get that feeling that maybe a rotation, maybe something like that could happen soon and rebalancing could be useful. Brett, just quickly on that, how would you feel about the state of play at the moment?
Yeah, so honestly, I'm glad that you mentioned that because I was looking like, through my screens and different watch lists the other day. I have like a valuation column attached to a lot of these names, and you're looking at them and you see them trading at either at the lower end or at new 52-week lows on a valuation basis. And then you start to like dig into some of those names. Some of these names are down into these are like not poor quality names. These are high quality industries, high quality firms within those industries. They're trading at valuation levels that have been a trough area for a decade. So these are like high quality companies that have sort of been left out of this rally. And when you sort of, zoom back up to 30,000 feet and look down, this rally has really been tech and semis. Is driving this whole move. And yes, the S&P's up like I think 8 or 9 straight weeks. You might think like, oh, this is an everything rally. It's like it's not an everything rally. In fact, we haven't had any of the financials we haven't had the financial sector, we haven't had the banks, the credit card companies. They're not really participating in this rally, which to me is always a little bit of a red flag. I like the banks to be involved with tech. That gives me kind of like a nice green flag. But I guess keeping the answer a bit more concise, I do think that there's opportunity to rotate, and not just for the sake of rotating, because it is hard to exit winning positions that have done really well. But I do think that there's nothing wrong with taking some chips off the table when we've had a very strong rally in one area and a lot of high quality, undervalued names still sitting there waiting for their turn next.
Yeah,
Yeah,
it
no,
feels like that the market is really at the moment concentrated in only few sectors, as you mentioned, Brett, and uh, like every run ends someday. No one knows when it will happen, and rebalancing is something that it's not the funniest thing to talk about because it's about trimming positions that outgrow your how like with how much you're comfortable with. But I think that when the market is doing so good and some of your position have outgrown, you need to start thinking about rebalancing just to prepare for some kind of rotation and just to be ready to to see the switch on the market. And I know that we will have a webinar about this topic next week. So everyone listening to this podcast today, and if you think about rebalancing, you can join us, you, Sam, and Martin next week, and you will be discussing rebalancing. So I think it's something that it's worth thinking about since, as you said, Brett, the market has been up for 8 or 9 straight weeks. So, and no one knows when it will happen, but corrections happen, and I'm sure that we will see a correction this year as well. So, it's good to be prepared for that.
yeah, absolutely. Just on that webinar, I'll put the link in the bio for anyone that does want to join it. That's on the podcast. Whether you listen to Spotify, Amazon, it'll be in the bio to click and join, completely free, and you can watch on demand, but it will be a live webinar next Tuesday, I believe. And for anyone listening to this that's thinking, what, rebalancing, why would someone do that, and the reason behind it? Well, just to keep it very simple, very low level, let's just say you invested in, I don't know, Nvidia 3 years ago, and you had like a rule where you say, I'm only going to invest, up to 5% in an individual company. Nvidia, if you invested 5% of your portfolio 3 years ago, it's not going to be 5% now. It's going to be a lot more because of how well it's done, and therefore the risk of that is higher. So you might want to trim a little bit of that, might want to take a little bit of a profit. That said, if you invested, in Nvidia 3 years ago, you're pretty happy right now. So you're also saying, well, whatever, fair enough. You can do whatever you want to do. But I think it's important to have that process. Let's talk about another big company. Just talking about Nvidia there, but let's talk about Alphabet. Nezha, before we have these podcasts, we always have a little catch up before, and any topic is on the table. But you wanted to talk about Alphabet this week.
Yeah, Alphabet is like one of the top news this week, just because actually about it because of two topics. First one is that Berkshire Hathaway decided to put another $10 billion to the company, and everyone is paying attention to what Berkshire Hathaway invests in. So it makes sense that Alphabet is one of the top news this week. And yeah, because and why is that? It's because the Berkshire Hathaway is sitting on such a huge pile of cash, and when they decide to invest in something, it's everyone is paying attention, and $10 billion is quite a big investment. So, and what is interesting in this one is that they are investing in Alphabet after after their rally, basically, because it's up more than 100% from last year. So investors are wondering what is behind, what are they thinking with that investments? Do they see it like a huge opportunity? Maybe do they see Alphabet as another Apple to their portfolio? Because it's a serious bet, because we know that when Berkshire Hathaway invests or opens a new position, they often start with relatively small positions, but Alphabet actually became one of their largest holdings in their entire portfolio, and that doesn't happen by accident. So I think that there is a huge conviction behind that. And what's also interesting is that Berkshire, when Buffett was still the leading man of the company, they weren't really into technology. Like Buffett was known to avoid tech companies because he thought that this sector is evolving so fast, that it's changing so fast, and he didn't really want to participate. So I think that they don't see it really like another big tech company. They see, I think that they see it as like foundational business and with durable moat and significant earnings power. So like it's really
Sam?
interesting that they
Yeah, I'm
decided to
here.
put more money in it after such a big run. And I don't know what you to think about it. Do you think that there is more opportunity out there? And because the other news that came out this week is that they are raising more money to invest into AI, which is clearly like a very good news, but market didn't take it as a good news because also that actually tells us two stories. The first one is that they are investing more in AI because they're seeing more opportunity in that, and they need more money to develop new things for data centers, for all of that. But the other angle that we can take a look at, like raising more money to invest in AI, is that AI is extremely expensive. So they need more money for that. And at the end, if they will profit from this investment, that's going to be huge. But if that investment won't pay off, it's going to be like a huge hurdle for the company. So there are always two angles to look at the story. So I think that Alphabet is really one of the top topics to take a look at this week.
Yeah, I'd agree with that. It's always a good, or it used to be a very good, show of confidence if Berkshire Hathaway is invested in your company. Obviously, with Warren Buffett stepping away now, maybe it holds a little less value, but we'll have to wait and see. We can judge people in their own time. I guess you'd have liked to have seen Berkshire Hathaway do this 14 months ago and get that 100% rally of Alphabet, but they're in a good solid position, good solid foundation. You'd imagine it'll be a pretty solid investment for the coming years as well. I mean, it goes back, I guess, to what we were talking about. Even if there is a correction, companies like that survive it, don't they? Certainly for sort of those people that want to buy these amazing companies at a bit of a discount as well. So, we go back a few weeks ago to where we talked about Nvidia and how it's maybe one, as at the time it was one to hold, not necessarily buy new. But if you do get that 10-15% drop in a stock like that, or 20% like Alphabet, whatever, it's a great opportunity to get in. And maybe we're going to see that in other Mag 7 companies that have been down quite a lot. Your Metas are down pretty big at the moment. Amazon, Microsoft's have had times where they've been down a fair bit, and maybe they will have their day again. But I don't know, Brett, for you, it seems like a pretty solid investment at the moment?
Yeah, I mean, I think it's an interesting. I think there's a few sort of takeaways that are less, just interesting takeaways, I guess. First, like Inesha mentioned, this is a step away from something that Warren Buffett would have typically done. We've seen him step into companies in meaningful ways. Granted, maybe this isn't a meaningful way when we're talking about a multi-trillion-dollar company, but we've seen him step into like the banks he likes to buy into distress. Is this like, are we seeing a little bit of a character change at Berkshire, something that's more embracive of tech, something that's more embracive of maybe a company you'd say trades at more of a premium than something Warren Buffett would typically be interested in? Not that Alphabet is egregiously valued. It is, for itself, it is highly valued relative to where it's been for the last 5 to 10 years. But in terms of like what we see in tech, this is a very profitable company, very strong business, and obviously it has a good foothold in AI. I think the other interesting takeaway from that, because that's more a little bit of a speculative question, like will we see some more of these deals from Berkshire in the future? But the other interesting note for this is Berkshire, their DNA does tend to be long term. This isn't like, hey, we're going to take a $10 billion slice here and look to flip it in 6 months. This is like, we're taking this and we will be holding it for several years probably. So I think if anything, this is Berkshire's way of, getting a little more exposure to that AI side and looking long-term, thinking like, yes, they're putting in $80 billion to additional, they're raising $80 billion for this AI investment. We still see returns in the future from this industry in general. So I think a few kind of interesting takes from it. Again, granted, Sam, to your point, I mean, you would have loved to see Berkshire do this, a year ago when Alphabet was 16, 17 times forward and not, 27, 28 times, which is sort of the upper end of its range over the last decade. But nonetheless, it is interesting to see Berkshire step in.
I like that you mentioned the point of valuation because Berkshire is really not known for chasing momentum at all. Because if anything, they're known for being extremely disciplined with valuation, and the fact that they're buying after such a huge rally, it tells me that they believe that intrinsic value of the business has is still good enough to invest, keep investing in the company. In other words, I think that they might believe Alphabet's earnings power in 5 or 10 years, as you said, they're looking at the long term, is much higher than what market expects now. And with all these investments, I think that they only see a huge potential in it and not a risk, because otherwise they wouldn't have it as a 9% position in the portfolio.
Yeah, I'm with you. It would be quite funny to see Berkshire just go rogue and be like, you know what? Yeah, we're flipping every 3 months. We're getting a new 10%, of our portfolio. Then we're gone. I mean, that would just be incredible. I also just listening to Neja and I say Berkshire, and then Brett say Berkshire. I mean, you're definitely saying it the right way, and I just want to apologise to all our American listeners out there that are hearing Neja and I say Berkshire, and they're just like, you idiots. But there you
It's
go.
all good.
Sam, at least I have an excuse that the English is not my first language. So.
Yeah, I don't have one. I don't have one. So my hands are up for those that are watching on YouTube. But speaking about America, one thing that's happening this year is the World Cup. I think officially starts this time next week. I think it's the 11th of June. Biggest World Cup in terms of the amount of games and the amount of teams that are participating. But we recently we did a bit of a study at eToro, just looking into a few different categories and sectors, kind of how they performed since the last World Cup, how they might perform this World Cup and going forward. And so we looked at hospitality, we looked at betting companies, groceries, sports clothing, and drinks companies. And I think one thing before we sort of go through the results, we looked at just the impacts really of inflation, certainly in the UK, is up since 2021 quite considerably, which is when the last World Cup was in Qatar, and it's definitely had an impact, I think, on the way maybe fans in general, people in general in UK and probably Europe as well, are looking to watch this World Cup. I mean, for example, you've got the England shirt now. If you wanted the actual one that the players are going to wear on the pitch, is £135, which is just crazy. So, we already talked multiple times about companies like Nike and Nike in general that have struggled in recent years. One of those reasons, amongst many, is because of these, the price of these shirts. They're pricing people out, and obviously other, up and coming companies like your Aloes and all of that have taken a bit of market share as well. But this is one of the biggest tournament, or the biggest singles sporting tournament in the world. And investing in, your Adidas's, your Nikes, your Pumas probably doesn't actually seem like a solid investment idea at the moment, even with all those eyes on it. Maybe for a number of reasons, but the price of a kit is just insane. Also, for anyone that's been to London recently, or the UK in general, the price of a pint has gone up quite dramatically too. I mean, some places in London now, you're looking at £8 a pint, which is just crazy to think about. And companies like JD Wetherspoons, Young and Co, Fuller Smith and Turner, Mitchells and Butlers, for a lot of people in the UK that would have heard of those companies, they've all kind of struggled really in the last sort of 5 years, down anywhere from 22% to 55%. And you look at the broader stock market, just how much that's underperforming. Betting companies as well, Flutter, Entain, Evoke, down 45, 67, 91% in the last 5 years as well. And that could be as well because people just have sort of less money than they did previously to spend on things. And obviously, if people will have a gamble here and there, of course they will. And I'm sure people will, like myself, will be tuning in into the World Cup to have stupid bets at 1 a.m. But betting companies have struggled and the sports brands have struggled. I mean, Nike in the last 5 years down 66%, Adidas 47%, Puma 70%. Drinks companies in general a little bit more mixed, but the grocery shops like Tesco last 5 years up 105%. Marks and Spencer's, another big company, up 123%. Sainsbury's 21, which isn't a lot, but a lot more than those other companies. So it might well be that heading into this World Cup, people are choosing to stay at home and go get those, the beers from the supermarket instead of the pub. And actually, that's going to be the play here. And those sort of traditional football stocks like your Nikes, your Adidas's, your hospitality companies as well are going to struggle a little bit more. Maybe that will be the case. We'll have to wait and see. But any sort of follow up on that? I mean, does that surprise you? Any of you? I mean, Brett, I'll come to you. I guess we're also going to see, the impact of that even more so if inflation numbers do continue to rise. And, there's no, you might well see that sort of stay at home stock do a little bit better.
Yeah, I mean, one theme so far this whole earnings season has been this resilient consumer, and as you mentioned, World Cup in North America, it's going to be even though I would say soccer is not the biggest sport in
Yeah.
the U.S., the event itself will certainly draw a lot of attention, strong ticket sales, a lot of at home, a lot of at bar watching. But at the same time, inflation has been something that's been weighing on consumers, and they've shown a willingness to sort of expand as far as their budget will allow. But for a lot of people, with what energy prices have done, what grocery prices have done,
Yeah.
it's gonna force them to the edge of that budget will be going to like the grocery store and watching these games like at home or with friends. And on the apparel front, you look at something like a Nike. I never thought we would have seen Nike sort of implode in the way that it
Yeah.
has, and
Great.
I feel bad about the Berkshire thing, so I'll commit my own foul right now. I'll say Adidas. We see these names. You can't walk outside and not see someone wearing these, and you would think it's almost that like Peter Lynch style of investing. Like, oh, everyone has these. It has to be a good investment, and that's not always the case. So I think it's a little bit of a reminder that just because it's a common brand or something you see everyone else wearing or doing doesn't mean that the stock is doing well. So I think that would be like my main. I think Nike has like forever seared that lesson in my memory. But yeah, I don't know. I'd be interested, like your guys' sort of take on that as well.
I'm really wondering how the stadiums will look like when we will be, at least I will be watching World Cup games from home. So I would really like to see how full the stadiums will be, since the tickets for the event itself are a couple
Yeah.
thousands of dollars. And talking about Nike, Nike is really one of the saddest stories of the market right now. It's in this time of when everyone is just waiting for this rotation to happen, for this turnaround. They have this CEO they're putting all of the hopes in. He's been with the company since basically all his career. He was already retired and then he came back as a CEO. So now everyone is really hoping that he will be able to turn the company around. And we see Nike everywhere, but as you said, Brad, that doesn't mean that the stock is performing well. And fingers crossed for Nike and for everyone who is still hoping in and investing in their stock that maybe World Cup will help them anyway. But like it's gonna be, there's so much change needed to see a turnaround in companies like that, because they're so well known, but they've been struggling for such a long time.
Yeah, they
Yeah.
have. They really have.
So, Sam, I'm curious. When last time I was in London, the people were spilling out of the pubs watching these games. That's going to be the case, will it not?
Well, I'd say definitely for England games. The issue obviously
Yeah.
we've got is that a lot of the games are going to be so late here.
Okay.
So you're going to have, I think England games in general are going to sort of be 10 p.m., maybe 11 p.m., maybe 1 a.m. And that, pubs will get the late license for that. So that in itself might be a reason why people stay at home. Like, for example, if there was, if Brazil were playing someone and it was, 6 p.m., I'm going to go to the pub and watch it. But if it's Brazil versus someone in a group stage game and it's 11 p.m., I'll just say I'll watch it at home. So I actually think that for certainly British companies, whether it be hospitality or drinks companies, that's going to be quite interesting. The impact that it would have there, the time difference. I mean, just I'd imagine for the England games it would be busy, but overall, I don't think it will go maybe as well as some of the pubs are actually planning for or expecting. That's just a gut feel. But also on the, just the spending thing, I was, 12 months ago, I was thinking I'm definitely going to America for the World Cup. It'd be incredible. And then it was the ticket prices, it was the hotel price, and it really put me off, actually. And I wondered just how many other people that has happened with. I'm sure it'll be a great World Cup and hopefully.
Yeah, but at the end, World Cup will really give us a real time
It
view
will.
of how consumer is really strong in, as you said, in UK and also in the US,
Yeah.
based on how crowded pubs will be and how how the stadiums will look like.
Yeah. I mean, and also, I mean, like Brett, as you say, it's not the number one sport in the US, but
Yeah.
it's, it's growing a little bit, to be fair. But,
Sure.
from a consumer point of view, if those stadiums aren't, full, yes, a lot of that would be, tourists anyway, but it would be a pretty telling sign, I think. I think Nezha's right. We'll sort of get a real life update as we see it, really, for just how people are looking at it. 'Cause it's like if the Olympics come to town,
Sure.
athletics isn't the top sport in any country, really. But you go watch the Olympics. Like, if the World Cup was, if you had a stadium 30 minutes from your house, you're going to go. But if those stadiums are half empty or not full, it's kind of a pretty telling sign, I would say. But we can review that in the coming episodes. I mean, people are probably sick of me talking about football, but there's an excuse here. There's going to be method to our madness. But we'll wrap it there for today. This time next week, the Football World Cup begins. Exciting times. Brett and Nezha, as always, thank you very much.
Thank you.
Look forward to it next week.
Take care, guys.